Welcome to Crypto Radar Daily, where the signal rises above the noise. Today we're diving into a fascinating perspective on Bitcoin's potential value, with rising concerns over sovereign debt. Some experts believe Bitcoin's fair value could reach an astonishing $224,000. This raises questions for investors and newcomers alike. What does this mean for cryptocurrency in our portfolios? With global markets jittery over debt levels and bond market instability, many are looking for refuge. Bitcoin, often called digital gold, is seen as an attractive alternative store of value during financial uncertainty. If fears around sovereign defaults continue to mount, Bitcoin might just soar as a safe haven asset. But how do we arrive at that $224,000 figure? It's important to note that Bitcoin's value isn't solely determined by supply and demand. Its perceived safety and utility as a reliable investment play a significant role. As the risk of government defaults increases, demand for decentralized assets like Bitcoin may rise. This tendency is crucial for those seeking protection against currency devaluation and inflation. Sovereign debt, the money borrowed by governments, becomes a concern when countries struggle to meet their obligations. As this debt increases, fears of potential defaults can lead investors to alternative investments. This is where Bitcoin comes in, operating independently of any nation's financial struggles. For those considering Bitcoin, its potential to rise tied to debt fears emphasizes understanding market psychology. When traditional assets like government bonds falter, Bitcoin's appeal tends to increase remarkably. However, with that potential often comes volatility. While Bitcoin might experience wild price swings, its long-term investment thesis could strengthen as it positions itself as a resilient asset in economic downturns. It's critical to remember, though, that investing in Bitcoin carries inherent risks. Price fluctuations can be influenced by various factors, everything from regulatory changes to market sentiment. So having a defined investment strategy and understanding your own risk tolerance is essential in this volatile space. As we wrap up, here's a key takeaway. Keep an eye on the interplay between sovereign debt trends and Bitcoin's performance. Whether you see Bitcoin as a hedge or a speculative investment, understanding the landscape will be vital as you navigate the complexities of digital assets. Before we go, make sure to follow this podcast for more insights. Like and share. And don't forget to follow the creator, Ciro Irmici, pronounced Ciro Irmici, on Instagram at Spartaco_94_. Thanks for tuning in.